The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We will have Shane Smoyan, Wolf Trader, will be on at around 9:15, and we're going to give him as much time as we can. He's got a new service, and he's always got some great information, so we'll have Shane on in just a little bit. The first two charts that I posted are our usual ones, the German DAX and the Footsie, and as you can see, there's not too much panic in these markets. There's a little bit more than ours this morning, but that can dissipate in a heartbeat. There's a lot of things on the internet, folks, that are absolutely baloney, so be careful what you believe and what you hear, because we don't really know. China seems to be doing everything they can to correct this, but you know, the reports that come in and stuff, I would take them with a grain of salt. So just keep that in mind. I mean, if it's as bad as some people say it is, it's going to be really bad, and if it's not, it's not. That's basically the bottom line. So let the charts tell you which direction you want to go. That's what I would be doing if I were looking at that. Anyway, let's move on and look at the chart that Rich Anderson was kind enough to send us. This is the one of the E-mini S&P going back quite a ways here into way back into October. You notice it's finally broke those trend lines. The thing is, folks, you notice that we went up yesterday and we made a 61% retracement of the high there at 33.38. That came in at 32.91. We got down as low as 32.40 today. We're trading around 32.55 or so right now. So that's going to be interesting. If we close below that low of 32.20, folks, that's going to be very, very important. Because the reason why is that's one standard deviation from the mean, and that's how the options people, you know, price their options. So you'll be able to see which is going on. That's a very good thing to be looking at, Dennis. It's hit the exact 61% retracement on that British pound with the bullish news. So it's going to be interesting. Evidently, they didn't do anything with interest rates, and that was perceived as being quite bullish. Okay, the next one that we want to talk about comes from our friend Tom Hugard over in the UK. Basically, what he's looking at here is a chart of the Dow Jones Industrial Average with price projections based on the last retracements. You'll see that these equal to around 27,700 to 27,200. Those are the types of things that he looks at as in watching these things. You can see where we're at now. We're at 28,000. So if this is correct, it's very interesting. Folks, there is a possibility that this thing with the virus, the coronavirus, could be a black swan event, something totally unanticipated that could be, you know, very, very interesting. If you see some of the pictures coming out of China with absolutely no one there, I mean, the malls, I saw one last night or early this morning that Sarah showed me that showed the Bund in Shanghai, which is equivalent to the Miracle Mile in Chicago or Times Square. I mean, with people there all the time, and it was early in the morning, and there was nobody there. And I've been to that Bund 3 or 4 times, and it is, you can't fall down. There's so many people. So it was really deserted. So whether it was a true video or not, I don't know. It certainly looked video. It was it looked real, but you never know these days. It was done by I believe in a Canadian who was visiting in there. The silver has got a really good chance here, Ruby, if it can hold these levels that we made last night. Let's since we're in the process of doing that, let's take a look here quickly and see what we're watching here. Hold on one second. I'll get this silver chart up for you, Ruby, and we'll take a look at it here. If I can just find the silver, SI, where are you, silver? Okay, let's get it out here. almost ready. So let's bear in mind that we're very, very close. We've had a nice move off that bottom. We hit the 61% retracement here. I don't know. I'm still of the mind this is really bullish the way it came out of here this morning, but we'll just put it up here, let you folks decide. I'm sort of friendly to the gold market. As you know from the video that I've been sending out, and it does look like, the silver could latch on too. We did make the 61% retracement of the December low. That came in at the 1742 level. We got down as low as 1728, and now we're 70 cents higher. So that's a really strong thing, especially when you gap up with that real strong move like that. That's something that you don't want to fight that. That's a very, very powerful move coming off the bottom. And whether it's going to be a big thing or not, certainly remains to be seen. But it started that way. That's usually a good sign that it's going to. Those of you that attended the webinar last night, I give you a little bit of homework. Take a 15-minute chart and take a look at what happened to the silver this morning after the low was made down there at 1728. And I think you'll be reminded of what really happened. So kind of keep an eye on it as we walk through here. The other one, folks, is to keep an eye on crude oil today. The reason why is we are very, very close to that long-term ABCD level. We broke down below the $52 level twice today. Both times we've snapped back. So keep a very, very close eye at that 52 level on the crude oil, because if we close below there, that's going to be pretty negative. But we're very oversold. And the key time to watch, of course, is around 10 o'clock. Let's just get up and take a look at what we're watching here, just so you can get an idea of what we're watching here today for crude oil. Let's get it up here so you folks can take a quick look at it, and then we'll move on. I'm going to bring that up here in just a second, and I will put up the daily chart here on the crude, so you'll be able to see that, Kevin. We'll be able to see here, we're right at this support. Let's get it up here so we can see it a little bit better than that. And here we go. We'll get that key support up here, and you'll be able to take a look at it. I want to thank everybody that attended the seminar last night, or the webinar. It was very enjoyable, and I think we all had a lot of fun, and hopefully we learned something. That's really good. Folks, the natural gas is under big, big, big trouble. It looks like we're looking at about 175 in the natural gas. If you remember, once we went below that 85 level, that it was not very, very helpful. Let's get the daily, let's get the long-term weekly up here, because that'll show us where we are. We're getting almost down to that double bottom, which is at 160. So it certainly is a very interesting one to take a look at. That's what we're watching here, early this morning. So whether that is helpful or not, we'll have to wait and see, but no reason to buy the natural gas today. The only one that's really interesting here is this crude oil today, because we took out the lows of 4 days ago, which was at 52.13. We made a low of 51.98 and then another low at 51.92 this morning, and we bounced a little bit, and I'm talking very little, but we're very close to that big ABCD pattern that comes in at 51.33. So that's the one that you want to be watching. That's near those lows that we made way back in October. So, and with the number of days we've been down, like 9 days in a row. Well, we had one little up day, but virtually nothing. We'll be back. Shane Smolian will be our guest. Wolf Trader, 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back with one of our favorite people, Shane Smolian of the Wolf Trader. Shane, how are you doing this morning? Oops, thought we had him on the line. Good old technical support. I'm sorry, folks.
Good morning, Larry. Can you hear me?
Hey, there we go. Good. Yes, we're ready to go. Were you able to download your charts the way you wanted to, that you'd be able to share with everybody?
I think so. Can you see the screen right now? I'm going to share the screen. Can you see it?
I don't see it yet, but let's give it a try. Just a second here. It hasn't popped up. I think that's it. I think we're okay now. You folks in the den, could you give us a 10? There we go. Yeah, we're ready to go. This is good. We're ready to go.
Everybody can see the charts. It should say trade what you see.
Yeah, yeah, I know what that means. Hey, yeah, that's great. Hey, just go ahead, Shan. They had a lot of questions about the Fed and stuff, but why don't you share what we're looking at, and then if we have time for the questions, just 2 questions, but we'd like to, to ask those. But go ahead. You've got the mic.
Sure, and thanks again for having me today, Larry.
It's our pleasure. Hope to have you on regular.
Oh, absolutely. Let's do it.
Okay.
So I'd like to just do a review here of the Fed juice, just for the listeners who haven't seen this in the past. So in essence, my thesis here is that since 2009, with the quantitative easing, the Fed has found ways to influence the markets. And this is a broad-based campaign. And since this time, they have improved their number of tools and their efficiency in the way that they deploy the capital. But there is specific periods here going all the way back to 2009, which they went through these periods where they would start the QE, They would pull back on the QE. They would start a new QE. They would do something different, like an Operation Twist, and they went back and forth. And the reason why this is important is because if we're going to apply cycle analysis, astrological-based analysis, pattern recognition, all of these different things, I believe that it needs to be in synergy with what the Fed is doing. And it's not that these other things don't work, but it's that when the Fed is very strong, that the influences of those other things tend to drop. So these were the different periods here. So we had 2009 to 2010. 2009 we started the QE, then we had a stress test, QE2, twist, and QE3. And then after that, those QEs, they started something called what I call the silent QE. In other words, they figured out how to do this behind the scenes without actually calling it QE. And they were able to become more efficient. They were able to drive the markets in a very similar way without creating this public perception that something was wrong. So this is kind of how they're operating right now. And they're in something that I call a reflation surge right now, where they're actually reflating these markets pretty efficiently. So this, and a lot of this goes back to when our friend Jerome Powell came into office. I think he went through a learning curve, and he has now kind of figured this out. So this is a chart showing kind of the history of the QE. If we go over here, this is QE1 over here. This is when it all started. And then we went through these different periods, and I'm measuring this, and I have this indicator here. This is kind of a raw data that I collect from the Fed, and it's normalized, so it's not linked to any price. So in other words, this is not like I've not correlated this to the price. It's not a moving average ribbon of the price, but the market tends to generally move with the Fed on the long-term basis. And when the Fed tends to have these periods where they pull back, the market tends to struggle with the Fed. And I think this is for a variety of reasons. I think we've had a lot of liquidity issues, and the Fed realizes this. Many people will remember back in the fall, we had a liquidity issue with the repo market. And I think this is when Powell finally understood his role and the role of the Fed. And I think he got up to speed with that. And they have since doubled the repo market. And it functions a lot like a lending market, but in essence, that provides liquidity. So what has happened here since going forward all through these periods is that we had this stress test here in 2018, and that was that big decline that went across that holiday seasonal period. And ever since they did that, and I think this was Powell, my personal opinion, he was kind of testing things out to see how the market could hold up without this side-by-side influence of the Fed, and I think he saw that it didn't work out too well. So they started this new campaign of this reflation of the markets, and so that's what we're seeing now. And if we go forward here to the next slide, let me show you this. Now this is interesting. So what I want to show you here is this is the Planetary Speed Index, and we talked about the importance of using the Astro hand in hand with the Fed. So it's not that the astrology doesn't work. It's not that the pattern recognition doesn't work. But what it is saying is that when we have a strong Fed, it's much less pronounced. But if you take a look here, this is during the 2010 period. This was the flash crash. Everybody remembers this when the algos shut off, everything shut off. There was no market essentially and everything went into free fall. And if you can watch these documentaries on it, it was a scary thing because there were no market makers. Everything shut off, and these stocks were trading at these incredibly low levels, and then they just repriced them back up. And so the thing I want to point out here is, though, that during this period, this was a weak Fed period. So if we go back here, this 2010 stress test period into here, that's what we had during this flash crash period. So in essence, when we have a weak Fed, the market tends to follow this Planetary Speed Index very well. Now, this is something that I put in this newsletter. I have two services that I've just started. One of them is the Twitter service, which has been going, and I call it the Gold Package now, and it has all of the charts of the newsletter, and it has live updates every day. But in the newsletter, I focus primarily on the S&P 500 because I believe that we have an advantage between the Fed and this Planetary Speed Index. These are two really big advantages on the markets. And you can see here that when the speed of the planet starts to slow down, that the market tends to follow. So in this flash crash, you will see here that it's not a coincidence that this happened when the speed of the planets was at one of its lowest points. This often happens during Mercury retrograde periods or right around that retrograde date because there tends to be a lot of confusion. So when we have this weak Fed, things like the planetary speed and these other indicators become much more important in the big picture. So I just wanted to point that out. And this is something that we put in the newsletter. We put the solar cycles, lunar cycles, and I actually have a lunar cycle of the Federal Reserve. So in other words, I've taken their behavior and I put it into an actual lunar solar cycle. This is a chart that I had put up before, but it essentially just shows that on a daily time frame, when the Fed starts to pull back on that liquidity, the market tends to struggle. Now, why would this be the case? Well, a lot of times, if you think about it, the market has liquidity of its own with its investors. In other words, these firms have to provide margin to customers. And so when the liquidity dries up, they have to pull back on the margin too. So this liquidity of the banks affects the markets directly. And there's many other ways it could affect it. That's a more benign way. Other people believe that there's something like the plunge protection team where they come in and directly buy the markets. The point is that I have my theories about what's going on, but what we can do is we can track, in essence, what the Fed is doing and then its overall broad-based impact on the markets. And this chart here shows that when...
Oh, Shane, we've got to pay a few bills. Could you be back with us in 4 minutes?
Sure, no problem.
Thank you. We'll be right back with Shane Smolian, Wolf Trader, folks. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolian, the Wolf Trader, and you want to continue, but we have one question that someone's asked, Shane, and that is, you talk about the plunge protection team. The question is, does the Fed come in and buy stock index futures and currencies and gold and silver on a regular basis?
That's a good question. Officially, their stance is no, but the idea is that this happened when Ronald Reagan was in office during the crash, market crash in the 80s. And so I think they tend to, I guess they could if they needed to, but what I tend to see is that when we have these overnight markets, when they could be coming in and doing that, they don't really do that. It tends to happen during the day, which I think more or less these are general operations that occur throughout the day, and they've increased their number of operations throughout the day. So I guess they could. I know in other markets like Japan, they're actually doing that, but I think officially their stance is no, but it's really hard to know. I don't really concern myself with that, like how are they doing it? I just kind of follow the data that comes through every day because this is all data driven, what I do. So I hope that answers your question. So this chart right here, this is some reflations. And so sometimes if the Fed wants to turn the market, it might take a couple weeks. So in this case right here, this took 4 weeks to actually get to the bottom here. So once the Fed juice turned up here, you can see it actually took a couple of weeks for it to turn. So it's not like they just come in and they control everything. So this is a longer term subtle influence. So we got to understand that. And the same thing happened here. It took 2 weeks to get to a bottom there. So just some examples. Like I said, there's a lot of different ways that they could do this. But so I just want to put some points out here. Maybe we need to rethink some common assumptions, okay, in regards to equities, not necessarily other markets, but the equities. So sentiment, euphoria at tops. Everybody talks about this. Market tops happen with euphoria. Does that really matter anymore? I mean, we got to ask ourselves this question because sometimes these sentiment values stay at 95 or 98% for weeks and weeks and weeks and weeks before the market can turn. Does it really matter anymore when you have an outside influence pushing the markets up? And I'm not saying yes or no, I'm just asking the question here. Volume, does it really matter anymore? In other words, if you have a helping hand coming in on a broad-based spectrum, that might actually be an advantage to have low volume for a rally. So does that matter? Like in the past, this mattered. We wanted to see volume into a move and up or down, but does it matter now? I don't know. I haven't got a clear answer to that because I see different cases where it happens. Overbought levels, does that matter anymore? In other words, if you have an outside force coming in and you see something that reaches an overbought level, if it's artificial, does it matter? And should we take it as seriously as we did? Market seasonals, have they shifted? I just showed you on that last chart when the Fed pulled back in December that markets went straight down during the Christmas rally. So it reminds me a lot of when you have, like, let's say you have like a big storm, a hurricane that comes through, and the sandbars and the islands shift and everything shifts and changes. I think maybe these seasonals have changed since the financial crisis. So this is kind of interesting too, like seasonals that we have depended upon for 50 to 70 years, have they shifted? I think it's possible. Astro cycle indicators, do they still work? And again, I would argue, yes, they do, but you need to be in tandem with the Fed. And when the Fed is strong, it's going to be hard for that market to come down. Market manipulation, can it be influenced? This is a big thing. People say, well, the market's so big. How could this possibly be true? Again, so what I would say is just focus on the data, focus on the charts, and let's try to, I try to not think to myself, how could this possibly be? I just look at the data that comes through. So what's going on right now? Okay, we're in 2020. We have a very strong Fed stimulus. The Fed stimulus is at all-time highs, the way that I measure it. Okay, so I measure a variety of tools to the day. It takes me a long time because now we have so many different tools that they use. And when they rebuilt that repo market in the fall, now you've got this whole market coming in. So you've got all of these stimulative tools coming in. They're getting very good at doing what they're doing behind the scenes. You actually have outright treasury purchases again. So this is a significant development too. They had stayed away from this because this was during the traditional quantitative easing periods, but now they're actually doing it. They're purchasing outright. Okay, so I think Powell has finally adjusted, and he understands now. And this is important because Bernanke always understood from the beginning, and Yellen continued in Bernanke's footsteps. But I think Powell understands now. So this is important just to understand that backdrop, that the Fed is stronger than ever on these markets, and they're doing it, I think, to try to keep a sense of calm over the markets, because they want to do this without calling a QE to panic people. Okay, because you and I both know that the psychology is important. So what I do is I price the S&P in terms of the Fed juice. Okay, because why do I do that? Because the price of the market, if it's being pushed up, it's not going to tell you much in terms of you're not going to be able to see a cycle low or a cycle high if it's just going up all the time. So what I've seen is that we are at a historic low in the Fed juice, S&P price and Fed juice. So what does that mean? I'm going to show you some charts in a minute. It means that a multi-year rally is likely underway. And when you price it in other things too, like you could price the S&P in gold and natural gas. When you price it in natural gas, it's extremely strong. So there's a lot of backdrop here, but we always have wild cards. For example, this coronavirus, this could be serious. It's spreading faster than the Spanish flu did, or as fast in 1918. You have the impeachment trial going on. The longer this thing goes on, the worse it is, I think, for the president. I mean, a lot of people think that nothing's going to happen, but to be honest, we really don't know. And then, of course, the election, you have wild cards. We can't assume that something's going to happen. So these are things to keep in mind. Now, this next chart, this is just the weekly chart of the Fed juice. And I've always been saying to my subscribers on the gold package and Twitter service that, look, as far as I'm concerned, as long as this Fed is pushing this stimulus in at these record levels, we are bullish long term. And if you looked at the price, you would say, oh my God, this is so high. How could this possibly be true? 10 years of bull market, it's got to be at the top. It's got to be at the top. So it's taken me a long time to change my thinking, to just follow and trust what the Fed is doing. And they're pushing this in. And you can see here that we're at all-time highs, and it's still very strong. Of course, you get little pullbacks here and there, but we are pushing through here to these all-time highs. And
Bill,
so this is where,
Shane, 1 second. We have a caller from Florida. Bill, are you there?
I am, Larry.
Well, go ahead and ask Shane your question, my friend.
Sure. Good morning, Shane. Great to speak with you, and fascinating to listen. Shane, my question is the Fed juice and the Fed stimulus and following the Fed. How does the Fed juice manifest itself? And I'm sure it's complicated and there are many aspects to that, but can you give us any specifics on what is the Fed juice? How are they stimulating the market? How does that manifest itself?
well, okay, so this is an interesting question. So I collect this data, and I can speculate on what I think is going on. It could be anything between they're pulling off bad debt off the books, off of banks with mortgage-backed securities, or when they pull these off the books, they're providing liquidity to these banks. In other words, if they have a minimum standard for equity or a minimum standard for cash reserves, now they're raising cash. It could be that the repo market is affecting, if there's no liquidity, then these firms can't issue margin, or they have to pull back on the margin. There's many different ways that this can go on, but the point is that these operations are affecting the markets.
Shane, stay with us. Bill, stay with us. We'll be right back after we pay a few bills.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, Shane, you want to continue, please?
Sure. And again, we could go on about how the Fed does this. I have other theories about it, but they're also creating a balance sheet and they're creating an inventory, and with that inventory they can do things, they can deploy that capital. So there's so many angles to this to look at, but I just want to put this out here to show you guys that, look, they just purchased $2.2 billion worth of treasuries, outright coupon purchase. This was not mortgage-backed securities, repo market, discount window. This was they're buying treasuries. Like, this is like the real thing. This is real QE. So what is the market in terms of real money? So I know we're running out of time here a little bit, but I'm going to talk to you now about how I measure the market. So I price it in terms of Fed use. Now this chart here is a daily chart showing on the top here, the white is the S&P 500 on the daily chart, and the cyan and green, this is the Fed juice on a daily time frame. Now, folks, I'm not making this up. I'm not linking this to the market. This is not correlated in terms of the price follows this. This is what the Fed is doing, and this is what the market is doing. It follows it almost lockstep. In other words, I've never seen it follow it to this point. We're in a period of high correlation right now. But the important thing is when you look down at the bottom, if I price it not in terms of dollars but in terms of Fed use, every time that drops to these important lows, it marks an important point in terms of a rally. Like a rally can start to happen, and so we hit one on June the 10th. This was when we were in that channel, and this channel period here. Remember, this is when we're having those repo market issues. And then on the 13th here, you can see of 2019 of September, we had a low, and then we had another low just on January the 3rd. So according to this, if you follow this model, if you believe in this model, which I do, we just hit an important low here on the Fed use on the daily chart. And then you can see I labeled it A, B, C, D, E, F, and G. That in essence, you can almost see these turns correlating with the market, and it's incredible. And notice that the Fed juice is happening first. You can see that there's a lag. There's a few days lag there. So when the Fed stimulates, it takes a few days, and then the market does eventually turn. So again, like, this is a complicated thing, but I'm able to track all of this data. And again, sometimes it takes me till 3 o'clock to get all the data because it's coming in through so many different operations now. But they understand what they're doing, and this may be the new norm. I don't necessarily think this is some nefarious thing. It's a liquidity thing that they have to provide for the markets. Now, this is the one that's really important that I want to talk about, because this is the weekly now, the weekly. And what I want to point out here is that when you look at the bottom here, this is the one that I wanted to get to. And by the way, this is in the newsletter. The newsletter, if you go to the site, wolftradedfutures.com, I'll give a 7-day trial on a newsletter, and I give delayed updates on the Fed use. If you go with the full package, it's live throughout the day, and then you get 10 symbols in addition to the S&P. The newsletter is just the S&P. But if you look here on April the 20th, 2012, we hit a low here on the S&P when it's priced in terms of Fed juice. In other words, you can't see cycle lows here on the S&P. You see this, it's just going up, right? But you can see it very clearly here when you price it in terms of the Fed juice. And after that, we had a 2.5-year rally. You see that? So this still holds true on a weekly time frame. It's just much bigger. The same thing happens if you look at October 21st, 2016. We had another historic low, and we had almost a 2-year rally after that. So that's important, because why is that important? Because right now that we're actually at one of those lows. We just passed one of those lows. So let me close this up and go to the next chart here. So right here on October 27th, 2019, we actually hit a historic low again on this Fed juice. In other words, if you price the market in terms of what the Fed is doing, we actually hit a low. Now you look at the market and you're like, how could that be a low? This thing's at like all-time highs. It's crazy. And I've learned not to pay attention to that. I've learned to trust this. In other words, that's what this model is saying. And to me, this model has modeled the market accurately since 2009. So that's what I would say to you. I'm not going to tell you for sure the market's going to rally for 1 to 2 years. We have to be very specific. What I'm saying is that according to this model says that we have a 1 to 2 year rally coming in the markets. In other words, we're just coming off a new low. In other words, when you price it in terms of the Fed juice. Now that may seem crazy to some people, and I know the market looks way, way up there in terms of price. But again, from this perspective, that's what's going on in the markets. And so that's what I watch. And so this is why I think we have an advantage here, with the newsletter and with the service, because I'm providing something that other people aren't. In other words, I'm looking, there's a saying that to find what you're looking for, you have to look where you haven't looked. And so I'm trying to look in other places that people don't look. And the Fed is one of the places, and the other one is the Planetary Speed Index, which is telling you the speed of the planets, and that's a very important one in terms of market direction. So that's what we have here. Now, this chart, I price the S&P in different things. I price in terms of dollars, of course we all do, the Fed juice, gold, and natural gas. Now, when you price this in terms of natural gas, this is one of my favorites, because I feel that this is one of the best models. If you're just looking at something, not the Fed, but just pricing in terms of natural gas, that this really picks out the turns very well on a weekly time frame. And if you look at the weekly time frame here on the November the 29th, this went into a buy in terms of natural gas. And so right now I see this as very strong. I mean, if I look at the Fed on the weekly and I look at the natural gas here on a weekly time frame, this looks very, very strong to me based on those models. So we have to be specific again based on those models. Now, we always want to look at the wild cards. This coronavirus, this is serious. I mean, it's probably surged past 10,000 people today, and that's shutting down industry in China. So I know that we are market technicians, but the reality is that if it starts affecting the economy on a large scale, yes, it will affect the market, even if the Fed is in there trying to provide liquidity and help this out. So we always have to consider that there are these events that could happen, and these are just models that can fail. But from what I've seen, these models have been reliable since 2009. And I want to point out to people too that since 2009, things are different. This is not, and this is, I know this is hard because some people, we've seen the market for years, years and 50, 60, 70 years, follow these trends and adages, and now all of a sudden it's doing all of these strange things. And I think that's why we need to look at the market from a different perspective, just to try to be a little bit more unique in terms of how we're looking at things, and maybe question some of the things that we hold to be market truths, in terms of like sentiment. Like I said, like, does the market have to be euphoric at a market top? I don't know anymore, because this isn't necessarily a natural phenomenon. And so these are just things that don't shut something out because it's new and different. Try to look at things always with a beginner's mind when you're looking at the market, even if you have a lot of experience, because it took me a long time to change the way I think about this.
Oh, that's really good.
Shane? Shane?
Sure.
So the chart, the daily chart of the Fed juice is made up of multiple I understand it's probably no doubt proprietary.
Yes.
No worries. But just give us an idea of some of the factors that are going into that chart and what makes up that chart.
Okay, I'll answer that when we get back.
Yeah, from the break. We'll be right back, Bill. Shane, we'll be right back.
Thank you.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. You want to tie everything together, Shane, but before you do that, tell the folks how they could reach you.
Sure. So the website is wolftraderfutures.com. www.wolftraderfutures.com. There's also a free Twitter which is at Wolf Trader FUTU, like Wolf Trader Futu 1. And that's how you can sign up. Now, on the website, there's actually a free user account. You can go there. If you go to the login, you can get a free user account. And I'll have a page, like a free member page. But there's the two plans there. There's the gold membership, which is 10 charts updated throughout the day, live Fed juice throughout the day. It's on a separate Twitter feed at Wolf Trader 1. And then the newsletter comes where it's just the focus is just the S&P. And I put in there a snapshot of the Fed juice, the different cycles, transits, solar cycle, lunar cycle. I have a Fed juice lunar cycle, the S&P, and I put them all together on a grid so you can see them. I put in there, key transits, retrograde dates, things that are traditional astro. But I try to tie this in with the Fed, and then I'll give delayed updates. So you'll get to the website, and then you'll have a page there where I'll put delayed Fed juice updates. It's not going to be live like the Twitter feed is, the gold membership, but you'll still have some information there throughout the month.
Well, this is great. And just what's your email address that they can reach you?
Email is shane@wolftraderfutures.com. And there's this, like I said, there's a 7-day trial I put on both of these. So if you want to just try it out, feel free. And I could extend that too if I needed to go to 14 days. If you feel that's not enough time, that's fine too. And then the website is wolftraderfutures.com, and the Twitter is at wolftraderfutu1. And like I said, feel free to drop me a line if you have any questions. I will be starting to post some charts on the Twitter and all these different things so you can get an idea of what's going on here. But I'm really excited about it. The website is great. It has a blog. There's even a chat function on the website. So it's really exciting. I mean, there's a lot of functionality there that we can use to communicate with the subscribers.
Well, that's great. Listen, we'll have you on again soon, and I want to wish you a very happy Super Bowl. It's going to be pretty crowded down there in Miami, isn't it?
Oh, that's right. That's right. Yeah, thank you, Larry.
Okay. We'll be right back.
Thanks for having
folks.
me, guys. Thank you.
Thank you, Shane. We'll see you all tomorrow, folks. May God bless.